Hello traders, what's going on? This is Prof from Bencov Forex-Academy speaking. Before I start talking about what we're going to discuss today, I just want to remind you guys to support the channel by subscribing. Make sure you hit that red button to subscribe to the channel and make sure your notifications are on so that as we send these videos, you get them first hand. Also, we do market analysis, especially during the weekends when the market is not moving for currencies and when weekly candles are just starting to develop for volatility indices. We do market analysis that you can take advantage of. So make sure you subscribe to the channel, make sure you don't miss anything. So I'm going to do a quick recap of what we covered in the first video. I promised that we are going to do 3 videos on market structure. The first one was covering the nature theory, where I was talking about how market moves in terms of the nature theory, where we're simply saying that when the market is moving in accordance with the nature theory, it moves in impulses and corrections. We also discussed how you can even use in your strategy that you're using, take advantage of that knowledge of how the market moves. Especially if you know how to trade patterns, it then becomes even more simpler for you to then take advantage of that market structure movement of where price is moving in terms of what impulse and corrections. Now we want to talk about beat the market maker market structure, how the market moves in terms of in accordance with the market maker strategy. So in accordance with the market maker strategy, the market moves in form of MVVW or MAAW. This is the movement when the price is in a bearish mode. This is the movement when the price is in a bearish mode, and the MAAW is the movement when the market is in a bullish mode. So I'm going to just explain that these two words that I've just put there using a chart here that I'm going to draw so that you see what we are talking about and how the market is moving in accordance to that. Let's just take this drawing tool here and explain what I'm saying. So I'm going to start with the bearish movement of the market. So with the MVVW, we are saying that the market, when it is moving from up going down, is going to form what we call a peak formation high, which will be in form of an M. Then it goes down and form a correction, which is a V. Then it goes down and form another correction, which is a V. Then it goes down again, where we will then expect the market to develop a what we call a peak formation low. Then it will go up, giving us another correction, which will be in A. Then it impulses go up, then it gives us another A, then finally up and give us another peak where it then starts going down. This is how the market moves in forms of what, or in accordance with the BTMM. So it moves in impulse and correction, but in this case we are saying it moves in levels. How many levels does the market then moves before it corrects? In accordance with the market maker, if you can count here, this is peak formation high, this is peak formation low, this is peak formation low. Just allow me to interchange those words. This is supposed to be a W. We're moving from the downside, and this is supposed to be an M. Okay, so this is peak formation low, and this is peak formation high. So if you just check those two words there, you're going to see that in accordance with the market maker, the market moves in 3 levels. So we have level 1 that I have just highlighted there, level 2, and finally we have level 3. Let me just make sure that those are well arranged. So these are the levels that will be having in accordance with the market maker, and as we go up again, we will also have level 1, and we will have there level 2, Let me clone these lines so that this doesn't keep on popping. We have level 2 there, and we have level 3 as we go up. So this is a market structure in accordance with what? With the market maker strategy, with the BTMM strategy. There are two ways of counting the levels. There are two ways that we can use to count these levels. We can use EMAs, moving averages. I'm not a fan of indicators, so we are not going to use moving averages in this video. I like price action. I like to slice and dice price action. I'm a price action trader, so I will show you how to count these levels using price action rather than using or relying on indicators that can sometimes not give you proper information. You rather be the indicator yourself than waiting for EMAs to cross or something like that for you to be able to count these levels. So as you are going to be counting levels, what are the conditions if you are going to then use your price action to count these levels? What are the conditions that you are expecting? What exactly are you then expecting to see before you can call it a level? What exactly are your expectations before you can then say, well, this is a level completed and I'm going into another level? The first thing that you will need to identify is your peak. You need to identify the highest point of that impulse, or you need to look at the left of the price action and try and identify 3 levels in the same way that I'm going to indicate to you here. So after you identify your peak, you need to see a peak lock. You then need to see a peak lock. You need to see a movement away from that peak, breaking the structure. In this case, breaking this low that you would have been given here. So after that, you then need to see consolidation for you to confirm that a level has now been formed and it has been completed. You need to see, number one, you need to see consolidation. You need to see consolidation. And as you see that consolidation, it doesn't matter how big the consolidation is, but remember, consolidation is correction which goes against the direction of the major price action trend. In this case, the price would have been going down, so you want to see a price forming this V here that I've indicated here. This V should be in form of what? Of a correction. So you want to see this consolidation. That's point number one when you are counting these levels. Point number two, you want to see your stop hunt. I'm going to explain what stop hunt is. Some call it a fake out. If you are an ICT student, then you would know it as a Judas swing. Some will call it traders fake out. Then the last thing is that you want to see moving away from the level is what you call a shift candle. If these 3 things are there, then I would confirm that as a level that would have been completed. So these are the 3 things that I will be looking for me to confirm that a level has been completed. So remember, guys, what we talked about in the first video. We talked about price being displayed in fractals. If you are trading price action, then this word should not be new to you. What we are simply saying is, if I am on 4 hours time frame, the price action that I'm experiencing on 4 hours time frame will also be experienced under H1 and under a 30 minutes time frame, 15 minutes time frame, going to even 1 minute time frame. So these levels that I'm talking about here, and the way of counting these levels, which is consolidation, stop and a shift candle, is the same way that you count these levels even as you go deeper into 1 minute time frame. Because for myself, I normally use this as a 1 minute strategy when I'm looking for sniper entries, and when I'm scalping, when I don't feel like trading and I want to scalp, I just look for these three things. I look for my consolidation, stop and a shift candles. When I'm counting my levels, then I take my trades. So how many levels do I have here? I have 1, 2, 3 levels before the market can correct. But you also need to take note of one thing as you count these levels. If you are in a deep downtrend on a higher time frame, sometimes you will not get all the three levels. What am I saying? Let's say, for example, the market on higher time frame, let's say on H4, the market is going down in a downtrend like this. Then on H1, on this impulse wave here that I have as one move under H4, I would expect this impulse move to have the three levels, to have all this complete market structure. This impulse move should have three levels here, because we're saying price is fractal. So I would expect to have three levels here inside, and when the market is retracing like this, I would expect this to have two levels. Then I expect three levels there, then two levels, then three levels, then two levels, is something like that. So I'm going to show you on real price to see what exactly we are talking about there. So this is what we call market structure when we are under what? Under the BTMM strategy. We don't worry about the days. Some will then say it has to be a day rise. Some will then say it has to be weekly rise, depending on the time frames that you are dealing with. We are strictly sticking to these conditions, to just look for these conditions. Is there consolidation? Is there peak? Was the peak locked? Is there consolidation away from the peak? If we have consolidation away from the peak, is that do we have a stop hunt in that consolidation? After we have a stop hunt, do we have a shift candle taking out the previous low to then go into another consolidation? Whether the levels are squeezed and you don't have the days that you might be expecting, or they are not squeezed, you can even be able to count your levels in consolidations when the market is not moving anyway. Let's say, for example, I'm going to put ray lines here for illustrations. Let's say, for example, you have price moving in between. Let me just change the color for clarity's sake. Let's say the price action is moving between these two lines that I've just put here, and it's moving like that, and we don't necessarily have days of rise or whatever. They're just moving in consolidation like that. If you then use these three conditions, you'll be able to even count levels when you're in consolidation like this, and that information will be even more useful than to confuse yourself waiting for days to end and all that. Okay, so let's now go to charts and see how we can then count levels using these three things that I've just discussed here, that you need to see. Number one, peak formation, high or low. Then number two, you want to see that peak being locked by breaking the high and changing of direction. Then after the peak lock, you want to see consolidation away from the peak. Then if you see consolidation away from the peak, you want to see stop hunt in that consolidation. Then after stop hunt, you want to see price moving in the opposite direction of the stop hunt to then give you a shift candle. What is a shift candle? I'm going to explain what a shift candle is when we are on real market price. So let's just drop down here to price action, so that you see what I'm talking about as we look at the price. Let me just squeeze in the price a bit so that we are able to see. So if I look by just looking at this price before I start expanding it a lot, by just looking at this price that you can see here, you see that this has been the lowest point from this side. It has been the lowest point that has been broken here. So the moment I see this price action, that I have my lowest point there, that is broken in this case it has broken these lower highs that were being formed as the trend was going down, and after breaking this, I have my peak lock being locked by this candle that is coming back to retest that. So I have my peak lock there. Then I have shift candles. What are shift candles? Shift candles are clear impulses that are between the previous consolidation and the newly formed consolidation. So in this case, as I move away, let me put a red line there. As I move away from this point here, change the color to yellow for clarity's sake. As I move away from this consolidation here, you can see that there is a candle that is also connecting there. As I move away from this consolidation here, I'm saying that these candles that are making me shift away from this consolidation, I was expecting from this point, remember, to continuously form these lower lows and lower highs. But instead of doing that, I have moved in the opposite direction, taking out this previous swing point that had been formed here. As I move in this direction, what am I looking for? I'm now saying this has been my peak formation low, because I was moving from this side, then all of a sudden I've been experiencing this impulse going up. So this is now my peak formation low. So from this peak formation low, I will be looking forward to have my second consolidation. And from the second consolidation, what am I looking for? This is the consolidation that has just been formed here. Let's just look for our conditions to see if this is a level completed. So from this level, what I would want to see is my consolidation first. Then from the consolidation, then I would expect to see, if you see here I have correction, then there is a fake out low. After that fake out low, that's what I'm calling a stop hunt. Then I've been given a W there to then continuously move up. Then as I move up, to see that my level has been completed there, I want to see what? I want to see shift candles taking me to the next level. So these are the shift candles that I've been given there. This is higher time frame. Then from that point of view, again here I've been given what? I've been given another consolidation there. What do I have? I have fake out to the low, then immediately going up and shift candles taking me to where? Taking me to the peak. So after counting 3 levels in this case, I would then expect to have my peak formation high. In this case, if you check my peak formation high, what am I looking for now? From the peak, I want to see the peak being locked. I want to see the peak being locked, and then after the peak has been locked, I want to see 3 levels going down. So after the peak lock there, I want to see these impulse moves that I call shift candles that are taking me away from this peak that I've been given there. After that, I want to see a V, the first correction. I've been given a small correction there. After the small correction, I want to see stop hunt, these candles that are coming back to sort of faking people out to say we are now buying. Then from that, I want to see what? Shift candles again away from that consolidation. Then if I see shift candles away from this consolidation, I want to see what? another V. So I want another correction there before I go into my peak. So now if you check there, I've been given 1 impulse, 2 impulse, 3 impulses. Then what I would expect to see here is what is my peak. And sometimes peak takes time to develop because the market will be accumulating orders to then change the direction of the market. From this here, if you check, I can take this as my peak. Then what I want to see is movement away from this consolidation. There I've been given my first impulse. Now here is another piece of beautiful information that you need to keep in mind. As long as this consolidation does not come to take out what? To take out, let me use ray lines. I think they explain better what I want to talk about here. Let me grab this one here. As long as this correction that you are being given here does not come to take out this previous correction here to continue trend, then this is still a valid level. So using those conditions that I have just talked about, that I need to see consolidation away from the previous consolidation, I need to see a shift candle, I need stop hunt. As long as this consolidation coming back to the previous consolidation does not take out the previous consolidation, then the level still holds. This piece of information is going to help you count levels when we are counting levels in what? In consolidation. When you want to see your levels in an area like this, when you want to see 1, 2, 3, because here already using those conditions, if I can just help you count, using those conditions, you see that already we have 3 levels here. We have 1 level here that has been displayed. There is a shift candle there, so there's another level there. Correction back into this, there's another level there. So you can even count your levels even in consolidations using those 3 conditions. Then here we have 1, then another point there, then we have 2, another point there, then we have 3. Then we are given a peak. You want to see the peak locking, then you have 1, 2, 3 going to the downside. If you check this on a bigger scale, then you're going to see that, let me just shrink price action. You're going to see that this is the peak, and you're given the first impulse, number 1, the second impulse, number 2, a bigger correction, the third impulse, and this should give you your peak here. So this is how you can view the market in terms of MVV and the M inverted AA in accordance with the BTMM strategy. How do I use this? Let's just switch on to lower time frames, then I'll explain a beautiful strategy of taking advantage of this piece of information that I've just given you now. So this is the 2 minutes time frame as we continue with our BTMM market structure strategy. So how do I make use of this piece of information? I make use of this piece of information when, number 1, when I want to take sniper entries and I know my directional buyers from the BTMM and the Elliott wave and the nature theory combined. I know that these are going to be my turning points. So what I would do is I would then go on 2 minutes time frame, 5 minutes time frame, or a 1 minute time frame and start counting levels as the price approaches that key area. I would then start counting levels, and what I want to see is the market. I want to see the market giving me proper levels. In this case, if I then start counting from this area there, I'm saying this is my correction. Then I want to see the first impulse with shift candles like this. This is 2 minutes time frame. Then I'm given correction, then a second with the second impulse. I'm given correction, then a third with this impulse. In this case, I was given this correction again, which then took me into another impulse. In this case now, where I'm given this reset, I would then want to then start counting after those 3 levels, what am I expecting? I'm expecting to say that after these 3 levels, the market should retrace to take out all these lows that have been given. But if the market does not retrace to then take out these lows, I would then consider this a reset. And from this point here, I want also to continue counting the levels going up into 3 levels. After those 3 levels, again, I expect a reset if the market is not going to go down. But if I then get to my key areas with the market having presented equal levels, then what I expect is to take a trade without fear when I'm given this peak on lower time frames like 1 minute or 2 minutes. I will then take my trade based on this 1 minute time frame, expecting that to retrace. If I then use this 2 minutes time frame, for example, my stop loss is going to be very tight. You see that when you combine this with order blocks, how beautifully it works. You can see the piece of information here. You are given a peak lock there, then impulse, the retracement back into the peak, but it didn't take out the peak, so this is still stands as a level. Then you are given correction, then impulse with stop and there impulse, then another correction and final impulse. So you have seen that the market has moved in what there's an M there, V, an M, an impulse, V, an impulse, then a W here that you are given. Then the market gives you 2 levels and reset, and another what, impulse, correction, impulse. The correction is not as visible, but impulse. I would expect then the market to continue going down. So that's how the market behaves when it's behaving in accordance to the BTMM. This is the only piece of information that I use is per BTMM. No indicators, no moving averages. I just use this piece of information to just improve my sniper entries. Thank you for watching.